Hello. With the Cannabis Administration and Opportunity Act in draft form and the national debate on cannabis legalization heating up, we thought it would be useful to take another look at one of the biggest obstacles cannabis operators face on the path to profitability: Internal Revenue Code 280E. There are so many noble issues at play when discussing cannabis legalization, including criminal justice reform, individual liberties, restorative justice, free market ideals, just to name a few. But with the federal government caught in this half-in, half-out position, allowing states to create their own laws but maintaining a strict illegal stance at the federal level, one can't help but wonder what ulterior motives might be in play. In this case, the old axiom rings true: just follow the money. So today, we'll take a quick look at the quick history of 280E, whether or not cannabis reform is worth it, the real drivers behind 280E, and finally assess whether the current cannabis reform bills are really what we need. Stay tuned for more, and as always, be sure to like this video and follow us for more essential cannabis industry discussions. The information contained in this presentation is meant for guidance purposes only, and not as professional legal or tax advice. Further, it does not give personalized legal, tax, investment, or any business advice in general. When congressional lawmakers first conceived 280E in the early 1980s, the goal was to strip drug kingpins and smugglers of ill-gotten proceeds. A particularly brave drug trafficker had attempted to deduct a yacht and firearms purchases from his taxes. In response, Washington politicians authored 280E, which added to the arsenal of tools available then to enforcers at the height of America's war on drugs. Under federal law, the Research Service wrote, "All income is taxable, including income from unlawful activities. In contrast, not all expenses are deductible from a taxpayer's gross income. Taxpayers conducting lawful activities may deduct ordinary and necessary trade or business expenses when computing their taxable income." The unplanned effect of 280E today is to punish state legal cannabis operators by barring them from reducing their tax burdens with standard deductions for everyday expenses enjoyed by most other businesses. As a result, cannabis operators have a significantly higher tax burden than other industries, and the complexity of 280E rules nearly ensures a large percentage of operators will be found in violation of tax laws. A major question facing legislators and cannabis operators and advocates is whether banishing 280E is better or worse than what pending proposals in Congress are offering in exchange for federal sales taxes on cannabis purchases that compound with existing state and local taxes. On the House side in Washington, there's Democratic Congressman Jerry Nadler's Marijuana Opportunity Reinvestment and Expungement Act, or MORE Act, which envisions an excise tax of 5% that steadily climbs to 8% after 5 years. On the Senate side is Democratic Senator Charles Schumer's Cannabis Administration and Opportunity Act, which does the same but proposes a higher excise tax that begins at 10% and builds to 25%. Both would calculate this rate based on an average everyday market price for cannabis products, rather than, for example, set tax on each pack of cigarettes or bottle of alcohol. In other words, for the sake of reform, we may be replacing one cost with another that continues to punish and penalize legal cannabis businesses where we were seeking to legitimize them. Even conservative Supreme Court Justice Clarence Thompson asked recently if the value of 280E in relation to its original policy intent from Congress had simply faded away as a public mood has steadily shifted on cannabis from one state to the next. Justice Thomas's remarks came after a Denver dispensary called Standing Akimbo challenged whether federal tax enforcers could obtain private records from a state legal cannabis business in Colorado without a warrant to determine if the company was wrongfully deducting expenses to lower its tax bill. While Thomas is known among legal watchers for mostly staying quiet during oral arguments, he surprised observers with his forthrightness about 280E when the court turned down the opportunity to review Standing Akimbo's case in June. In a statement, he said, "Once comprehensive, the federal government's current approach is half-in, half-out regimen that simultaneously tolerates and forbids local use of marijuana. This contradictory and unstable state of affairs strains basic principles of federalism and conceals traps for the unwary. A prohibition on interstate use or cultivation of marijuana may no longer be necessary or proper to support the federal government's piecemeal approach." When a notoriously conservative Supreme Court justice emerges as a low-key advocate for cannabis policy change, it makes one wonder, who is against it? And more importantly, why? Now, as Congress once again considers comprehensive cannabis reform legislation in both chambers, Policymakers are worried about the effect of repealing 280E. Ironically, the reason is no longer a fear of rogue drug kingpins or the downfall of society in a haze of reefer madness. The real reason is simple: cash money. As one state after another has moved to decriminalization or legalize cannabis to various degrees, blocking cannabis businesses from reducing their tax burdens under 280E has become a major source of revenue for the federal government. The Tax Foundation, a nonprofit policy think tank, reported in mid-July that by the estimation of Congress itself, doing away with 280E would lower federal tax receipts over 10 years by a whopping $5 billion. If Congress enacted substantial reform in either chamber during 2021, the loss to federal government coffers would be an estimated $400 million for the fiscal year. The trade publication MJ Biz Daily determined in April that where cannabis businesses are paying their taxes, a comparable non-cannabis retailer pays $375,000 less each year in taxes. Keep in mind that these losses are just related to allowing cannabis businesses the same deductions as mainstream businesses. Even more money enters the equation when we consider the IRS long-rumored and recently confirmed penchant for auditing cannabis businesses. We published a recent video on this, but to summarize, the IRS has created a cottage industry around auditing and assessing penalties on cannabis businesses. As MJ Biz Daily also reported, the IRS earns 2 to 4 times more per hour when auditing cannabis businesses. And in recent assessment of audits in California, the IRS generated $2,788 per hour in their cannabis industry audits versus $682 per hour for mainstream industries. And at the conclusion of these audits, cannabis businesses on average in the US owe up to 5 times more than mainstream businesses. Tax hikes rather than tax deductions were always a likelier outcome with federal cannabis reform, the Tax Foundation writes. The long-hyped cannabis reform bills coming out of both chambers would bring relief to cannabis entrepreneurs, but they would also incrementally add to cannabis taxation that falls on consumers, but ultimately falls on businesses in competitive markets. While the proposed federal rates start at the lower end, they quickly become substantial. Since all states with recreational sales already tax either cultivation, wholesale, or retail sales, the federal government should err on the side of lower taxes. Overtaxing marijuana could result in a competitive advantage to illicit sales, which are still prevalent in most states, even in states that offer a licensed market. Unfortunately, current legalization bills are taking the opposite effect, piling federal taxes on top of state and local taxes. So is repealing 280E better or worse for cannabis operators and consumers in the end? Under the bills proposed by Congress, both suffer. By one estimate, the effective tax rate for cannabis businesses under 280E is as high as 60%. Federal cannabis reform repealing 280E would relieve some of that pressure on cannabis entrepreneurs, but they trade that burden for new costs in the form of higher retail prices. Tax Federation expert Ulrich Bosen has been examining the cannabis reform proposals closely. In an interview with us, he put it succinctly: cannabis operators pay a very high income tax rate, repeal of 280E, even with a 5 or 6% excise tax rate that may result in an effective tax cut. But you get a nasty multiplication effect in some states. That's one of my main concerns with a higher federal tax. I don't want the federal government to add regulatory burdens and taxation burdens that mess with that progress. The unfortunate takeaway is that in our current state, we get a damned if you do, damned if you don't result. Repealing 280E feels unlikely unless the federal government can get that tax revenue back in some way. So we get a 20% excise tax increase on top of the already oppressive state and local taxes. While cannabis businesses may initially celebrate the repeal of 280E, we have to wonder what the long-term market impact of raising cannabis prices by 20%. There is already a heavy struggle against illicit operations in every cannabis market. Increasing retail prices by 20% will only add fuel to that fight. The best hope is that progressive legislators can implement reasonable policy changes that don't result in oppressive tax regimens. In the meantime, cannabis operators must be absolutely vigilant in accounting for taxes. They must take an optimized cost accounting approach that minimizes their tax burden while maintaining proper SOPs and documentation to defend themselves in the face of an audit. Our experienced accounting and advisory teams at Green Growth CPAs have the insight and experience to help prepare your books, accounting processes, standardized reports and controls, compliance, and support due diligence. So if you're a cannabis owner or operator and you're looking to profit and grow in spite of 280E, reach out to us today at greengrowthcpas.com or at 1-800-674-9050. Thank you so much for your time. We hope this information has been helpful. If you have any questions or want more information, please leave us a comment below. And be sure to like this video and give us a follow to learn more about the cannabis industry.